Well, Bryce, before we speak to Anna Milne from Wilson Asset Management, let's talk about the company ourselves. We're talking about Orora.
Orora, ASX ticker ORA. It is a leading packaging designer and manufacturer.
Yeah, Australia loves a duopoly. In all of our major industries, we seem to have a duopoly. Telcos, Telstra and Optus, supermarkets, Coles and Woolies, airlines, Qantas and Virgin. Even in industries that you don't think much about, packaging,
Yes.
Visy and Orora.
Yes. You're right. We actually spoke to Anna about Amcor last year, packaging again. That was at a global scale, we'll ask her about that when she comes on the show. But Orora is broken into two.
Well, I mean, should we explain the corporate history?
Yeah.
That Orora was part of Amcor and then got demerged in like 2013.
That's the
That's the
explanation.
explanation. So anyway, we're not talking about Amcor. We're talking about Orora, and they are a packaging giant in their own right. They did a scratch over $4 billion in Aussie dollars in revenue last year, and they made about 180 million in profit off that. Tight margins.
Tight margins. So they split the business into two segments. The first is beverages. This segment manufacture a wide range of glass and PET bottles and aluminium cans for the beverage industry. And then the second part of the business is fibre and packaging. And this is where they produce things like corrugated cardboard boxes, paper bags, and other materials for, the food and beverage industry, healthcare, e-commerce. I imagine those little bags that you get your vitamins in and those sorts of things.
Yeah.
Very specific.
It's basically
example.
like walk into a supermarket, get past the fruit and veg section, look at any aisle, and all you are seeing is Visy and Orora packaging. Like you are just surrounded by bright, colourful cardboard, glass and plastic produced by these two companies.
Yes.
Yeah. And turns out there's a lot of money in it. Yeah. Not a lot of margin in it, but a lot of money.
A lot of money in being in a duopoly.
Yes. And we're not going to talk about Visy and Amcor's history with the ACCC. No. So, Bryce, today, what do we need to know about the company?
So, Ren, let's break down revenue a little bit more. 63.5% of its revenue comes from the beverages part of its business. 36% comes from fibre and packaging.
So I'm interested to talk to Anna about the investment thesis for this company because, as we've said, low margin. I would expect this is a company there's an element of pricing power from the fact that they're a duopoly and they're quite specialized and they're integral to products. Like all these fast-moving consumer goods companies aren't. They need a packaging supplier. But as the consumer gets squeezed, as cost of living becomes more of an issue, and as input costs rise for manufacturers, you think this would be a tough business to be in because you think you would see volumes fall from the consumer side, they'd be buying less, and you would see costs rise, but then you would also think there would be, pressure from the FMCG players, from the big Nestle's and all of them of the world, to keep their costs down. So you feel like they'd be kind of getting squeezed in this environment from a number of sides. So it's an interesting one to be talking about as we kick off 2024.
I think sustainability is also a key factor here. They position themselves as a leader in sustainable packaging. Obviously, consumer demand is only increasing when it comes to what we receive from Amazon and how our parcels come, less plastic that can be recycled, more cardboard, those sorts of things. Challenging environment to be in. As you said, Ren, a lot of the suppliers are looking for ways to make their packaging as cheap as possible. And I think sometimes when you bring in the sustainability element, that becomes a little bit more difficult. So I wonder if sustainability forms a part or how they're positioned in the market with sustainable product offerings.
Yeah, this one really grinds my gears a lot because I worked in the waste side of retail and like dealing with a lot of downstream packaging challenges, which were best solved by making different decisions upstream, like, not coating your cardboard in plastic so it could be recycled, or using types of plastic that weren't blended that had easy recycling options, things like that. But when you go upstream and you talk to the packaging players, the conversation is always a product safety and freshness v packaging debate.
Yeah.
And the argument, and it is an argument, it's a fair argument, that the biggest sustainability challenge is food waste.
Yeah.
And that if we can make food last longer and we can waste less of it, and therefore it's not sitting in landfills, breaking down, releasing methane, that's a better environmental outcome. And it's worth the extra plastic packaging or the unrecyclable packaging that then creates challenges downstream. Now, there's merits to both sides of the argument, but it just was one that was always really frustrating to me because we used to get these weird and wonderful recycling challenges, and it was like, here, how are you going to deal with this? It's I don't know.
What was the who generally won that debate?
Oh, the packaging people.
Yeah,
because they've got all the money.
Yeah,
the waste industry is always a deal with it.
Yeah,
if you think about who's upstream and who's downstream, upstream is Nestle, Mars, Coles brand, Woolworths brand, the biggest and deepest pockets. And they're upstream is sales, downstream is costs. The right packaging, the bright colors, all of that stuff, longer shelf life. Longer shelf life is cost, but good packaging can help you sell a product. Cost end of life options isn't going to help you sell it. It's just how much it costs you to dispose of it.
I think to that point, help you sell a product. They really make it. I think brands really make a big deal of it when their packaging is sustainable. You'll see it written on it. Recycle me. This is made out of bamboo rather than, I don't know, plastic or whatever it may be. So it obviously has an impact. But
I think, Bryce, this is probably a good point to turn to Anna. I think for me, the context of this company is it's just integral to our modern economy. It's not going anywhere. It's massive. It's a $3.5 billion company. It does over $4 billion in revenue. But the question for us isn't, is this company going to be here in 10 years? It's not even that. As investors, it's, is it a good investment? It's cheap. It's trading at a 12 PE. But I think my view, not knowing it as well as Anna, is it feels like it's going to be facing a lot of headwinds. It's going to get squeezed.
Nice. Well,
so I'd be interested to see where Anna sees the opportunity.
Well, let's bring her in. So we're here with Anna Milne. Anna, welcome to Equity Mates.
Thanks for having me.
Now, Anna, to kick off, how would you describe Orora?
So, in its most simple terms, Orora is a packaging company. They have three very distinct businesses. They have their Australian business, which is glass and cans, so beverage packaging. Then in the US, they have a business called the Packaging Solutions and Visual, which is a fancy way of saying cardboard boxes. And, at the supermarket at the end of the aisle, the kind of displays that promote certain products, they do those displays. And then in Europe, which we'll go into in more detail, I'm sure, is Saverglass, which is their more recent acquisition, which plays more in the high end on the beverage packaging side as well.
Nice.
Now, Anna, before we speak about Orora in too much detail, we've got to ask. Last year, you joined us for the summer series and spoke about Amcor.
Yes.
You're back to speak about Orora. What is it about packaging?
Well, it's interesting because I think last year when we decided to speak about Amcor, we were staring into quite a big downturn, and Amcor at the time was seen as quite a defensive play. Now, I'm sure if you look at the share price, you'll realise this hasn't necessarily played out. The trends that impacted consumer discretionary and staple stocks worldwide were quite severe in some sectors, and Amcor certainly wasn't immune. So not only did the earnings end up declining, but the perceived defensiveness also wasn't really there, and therefore the valuation also compressed. But here we are, back talking about another packaging company. Orora was actually spun off from Amcor in 2014. It was almost, I think, considered the ugly duckling, and now it's turning into a bit more of a swan potentially.
Nice.
Well, let's talk about how you analyse a company like Orora. So when you look at it, what are the metrics that matter, and what are the key things that you're watching from a business and a financial point of view?
A tip for analysing all companies, whether they be tech companies, small mining companies in WA, or more traditional industrials companies, is to go on the ASX and go to their latest annual report. And within the annual report is a remuneration report, and you can see what the executive management team is paid and how they are paid. So it has their short-term incentive and long-term incentive plans and the metrics that they need to reach in order to earn their full potential. So looking at that for Orora, the first hurdle that they need to meet is return on average funds employed. And it's a bit of a mouthful, ROAFE.
Yeah, I don't know if I've come across this one before.
No, it's slightly more unusual, but it's similar to the likes of a ROIC, a return on invested capital, in that it is really just the profit earned over the capital invested in the company. And it's a traditional measure used for the likes of industrials companies where they are generally quite capital intensive, and it measures how much they can really make their capital sweat and generate profit from that. For reference, when Orora was spun out in 2014, they had a 9% ROAFE, and it's now sitting at around 22%.
Oh, wow. Management will be cheering.
So that is the first metric. The second is just earnings per share growth. If management grows earnings at 8% per annum or greater, they can earn their full entitlement in that regard. And 8% is quite high when you think about it in the context of this is a traditional industry generally growing at GDP or the same rate as the economy. So to grow at 8%, you need to be doing something to your margin profile. You need to be doing some quite clever, acquisitive kind of growth, or entering new verticals, new customers, and all the rest. It's not really just status quo kind of growth.
Or borrowing a whole bunch of money and buying back stock.
That is another way. That is another method. If you've got the capital available.
What happens when you go to that part of the report and the metrics that they are getting remunerated on, you don't agree with, though? Like, if that's not really what you believe to be an important metric to measure the success of the business, how do you then play that?
I think as an institutional investor, this is where we can really advocate on behalf of our retail shareholders. If we have meetings with the management team or the board, we can discuss with them how they are paid, and if we agree or if we bring it up, we probably more likely disagree, and can maybe talk about why we disagree and what we would rather have them measured on. And then it is voted at the AGM.
Yeah, I feel like this is a bit of a tangent, but I feel like we've seen a fair few strikes against companies in the latest reporting season.
Yes.
Their remuneration reports or proposals being
Mm-hmm.
voted down.
Particularly those that have played out in the press as well, and the share prices haven't really gone accordingly. And it makes sense, you know, if they're not doing their job.
So I guess back to Orora. So you've looked at some of the key metrics that you've mentioned two there. Are there any other ones that are important to know that management are being incentivised on? I
think they really summarise the business quite well. If you just looked at earnings growth, for example, it isn't really that relevant, because if they are growing for the sake of growing and they're not meeting the return hurdles, then you don't want that kind of growth. But if they meet the return hurdles and they're growing above that, I think it is more than acceptable. What we don't need to look at with these kind of companies is those metrics that are, I guess, more modern, such as EV to sales and TAMs and the rest, which you rely on for companies that aren't generating earnings. But this is a traditional business. You can look at the metrics found in Intelligent Investor types of books, and they'll apply to the likes of Orora.
Yeah, I mean, this would have been a business that existed when Benjamin Graham was around, unlike some of these more modern businesses.
Exactly.
Yeah. So that's what management are running towards in terms of incentives, and that's the goals that they're setting their team. What, I guess, is the bull case? Like, where does Wilson's thesis come from around Orora?
So splitting the conversation into three parts, because their geographies are quite distinct. In Australia, it's really the cans business that's driving growth. Cans in general are growing really strongly. When you think about them from a sustainability perspective, they're not very energy intensive to make, and they're easy to recycle. You can market across the entire cans. They're quite good from a business perspective when it comes to promoting their product. They're easy to ship, they're easy to consume, it makes sense that cans are doing so well, and Orora has really leaned into that, and they have quite a large capital expenditure program over the next few years to bring on more canning facilities and more production lines, and their capital expenditure is actually already underwritten by their customers. Their customers need extra capacity, and they've said that we will take up any capacity that you can provide us. So the returns on that business are quite strong. We expect that's just a matter of execution. The glass business, on the other hand, is quite energy intensive and is often seen as not really the future, but for the likes of a wine bottle, we're probably not going to drink that out of a can, and that's really...
Back to the goon bag.
And they have actually been quite impacted the last few years from the Chinese tariffs on Australian wine. So we expect that there will be an announcement relatively imminently reversing that. So over the medium term, that should drive the glass business again, because they've had to divert slightly into more olive oils and the like, which is just lower margin because it's not what their factories are designed to do. Just going off on the other couple of businesses, so in the US, that's actually been a big turnaround story. They previously weren't able to see the profitability of each individual customer in the US, but they now have the SAP IT systems where they can go through each customer, and those that aren't generating returns either reprice them appropriately or ditch them.
I know. I was just thinking that.
It's so
it's
bizarre
wild.
that they couldn't figure that out.
You'd be surprised the number of what you consider sophisticated large companies don't necessarily have the disclosures to that level.
Wow.
But they've done a great job, and we really saw that at the last result, that their margin just really surprised to the upside. It's such a big market as well. Now that the margin piece is coming through, they can probably start to grow again. So that's the US piece. But then most importantly, and what's really going to drive Orora, is Saverglass. So they bought Saverglass for over 2.2 billion Aussie dollars. And they are a mid-cap size company, so it was transformative for them and required a big equity raise. And what Saverglass does is they design, manufacture and detail the packaging for high-end liquor and wine. So customers include Grey Goose, which is known for their kind of frosted glass, and Hennessy, to name a couple. But they actually own the rights to the designs, which is quite a big moat for them. They've never really lose customers. These relationships have gone on for decades, and it's quite valuable IP for these big global brands that use Saverglass.
They're a French business, right?
Yes,
and
they
so,
are.
So
Well,
why
no,
is
now they're an Australian business.
so why is premium glass what's the growth drivers behind that? Is it people are luxury spending? What's the growth driver of, I guess, premium glass at the moment?
I think luxury in general has seen, since COVID in particular, has really seen a lot of growth, whether it be in alcohol or clothing and bags, jewellery and the like. But what we've really seen there's a generational shift in that younger people are drinking less, but they are drinking nicer drinks on average. So you're more likely to get yourself a nice bottle of gin or vodka instead of having two. So I think the growth that they've experienced over the last few years has been remarkable, and they are pretty confident in that continuing.
Yeah, right.
So I think for me, when I think about Orora and the business you've just laid out, for me it just feels a bit disparate. It's a cardboard business in North America. It's a high-end glass business in Europe, and it's a can and glass business in Australia. But then even within that, the glass business in Europe is expected to be a key driver, while the glass business in Australia is expected to not do that well, or maybe it's a turnaround. So how do you build a coherent, thesis around this company and expect management to manage different it's all packaging, but it's all different packaging, I imagine, with different competitors and different customers in each business. So how do you think about the fact that it's so separate?
I think you've summarised it really well, and I believe that was a key element to the thesis in buying Saverglass. They are very Europe-centric. They want to grow in the US, but they don't have the reach or the customers or the capabilities. So they intend on leveraging the existing US business and the existing customers in the US and taking Saverglass to the US more that way. And then in Australia, as you said, the glass business isn't in decline, but it's not necessarily a big driver of growth for the company over the medium term. And they're going to start manufacturing using Saverglass's techniques and the like in the Australian facilities. So in a way, it's kind of the glue for the other two companies together. This isn't Orora's first acquisition. They've done a few acquisitions in the past, and they've always been very successful, extracted more synergies than initially anticipated. And management are really good executors in our view, based on what we've seen so far. So there is skepticism for sure around the deal, but if you look on the positive sides, there's definitely as many positives there too.
Yeah, nice.
So let's turn to the bear case. We're in an environment at the moment where we've got central banks trying to crush consumer demand. And no doubt...
Crush consumers, full stop.
Yeah, true.
Particularly those between the ages of 20 and 40.
Yes. And no doubt Orora is closely linked to, consumer companies. So talk us through how you see the current macro environment impacting Orora, and then more broadly, what are other red flags that you're looking for when it comes to, the bear case?
Mm-hmm. I would say that the bear case is a well-trodden path. I mean, as at date of recording, it's gone from $3.40 to $2.60 in a matter of months. And there are reasons for this, and they have good basis. I mean, the first one being they did a very large equity raise that took a while for the market to digest. I mean, when you raise equity, you have to raise it at a discount to the last close of the share price to attract investors. And often if you're buying a business on a higher multiple, if you think about it mathematically, the earnings will change, but if the number of shares on issue changes by more, there'll be a natural decline in the share price from that. So firstly, it was the equity raise. It had traded really well into it following the result when they had that was driven by the US. The US result was very strong, traded very well, and then they had an equity raise. And then following that, there has been more and more concern around the earnings profile for Saverglass. And it goes to your point around the economic slowdown that we are right in the middle of. And particularly for Saverglass, a destocking event. So the easiest way to describe a destocking event is that if you own a shop and you have less customers coming in and buying things, what do? You stop bringing more inventory into the store and you tell your suppliers, actually, I'm good this month, let's chat again next month. And then your suppliers tell their suppliers, actually, I'm okay this month, let's chat again next month. And it's a chain reaction which has occurred around the world and really been the domino effect of the slowdown that we're currently in. If you add to that we've just come out of COVID where supply chains were really difficult. So you own a shop and you have less customers coming in and buying things. What do? You stop bringing more inventory into the store and you tell your suppliers, actually, I'm good this month, let's chat again next month. And then your suppliers tell their suppliers, actually, I'm okay this month, let's chat again next month. And it's a chain reaction which has occurred around the world and really been the domino effect of the slowdown that we're currently in. If you add to that we've just come out of COVID where supply chains were really difficult. So that's really been what's driving Saverglass. And from a luxury alcohol perspective, it's not as fast moving as beer and wine where you might buy it on the bottle shop on the way home and then drink it with your friends that night. If you buy a nice bottle of something, it will likely sit on your cabinet for a few months and you can enjoy it. So the inference for that for Orora really means that this destocking event could be more protracted than the market was expecting and that Orora management was expecting. So it'll go on for longer and likely be more severe than maybe other companies. So that has been the thesis. Where we've landed is that they bought this business for $2.2 billion. Where it's currently trading on the stock market, the implied valuation is $1.5 billion. Management knew that the slowdown was happening. It was when they purchased it. They have said to the market that they've made very conservative assumptions around demand. And it's a business that doesn't come up every day. It's one of the only of its kind in the world. So they couldn't really choose necessarily the exact timing that they were to acquire this business, and they have forecasted accordingly. So we think the bear case is priced into the market, and that is the consensus view. But I understand what's probably driven it to where it is today.
Yeah, okay. It's fascinating. On the consumer packaging side, we were speaking about this a little bit earlier. It feels like their packaging companies are between a rock and a hard place. Like if we think about like a cardboard business, on one hand, they've got consumers that are probably buying less. And then on the other hand, they've got, in many cases, input costs rising. But then they have big multinational FMCG companies like Nestle and Mars who don't want to wear any price increases because they're also dealing with input cost rises. So it feels like they're just kind of stuck and their margins would get squeezed as a result. Is that right? Or is, I guess they're kind of a duopoly in Australia. Do they have more pricing power than we think?
I think for the saver glass side of things, when you think about the cost of a nice bottle of something, the packaging element of it is quite small. Therefore, their customers are less price sensitive than the FMCG types that you're talking about, like a Nestle or a Coca-Cola. So they're quite insulated in that regard, but certainly from cans and quite constrained, given the growth that it has experienced.
Okay.
And so their customers have less marketing than they otherwise would in this environment.
There you go. You learn something new every day. Massive demand for cans.
Yeah. Makes sense.
Yeah.
Now, Anna, we got to chat about sustainability. They committed to a sustainability, strategy a number of years ago. How does that form part of your thesis, or does it form part of the bear case? Just talk us through that.
If we look at the company in 10 years' time, for example, there will be this shift towards higher value, lower volume production. And again, that goes to why they purchased Saverglass. They want to enter those more niche categories where they add value across the value chain. They help with the design, they manufacture it, they finish it, they bottle it. They're involved the entire way along, so they can clip the margin through the chain. So we think that will really form a big part of their medium to longer term strategy. And when they form more of the value chain, it means they can have more of a say in the sustainability piece as well. They're no doubt definitely held to account from a sustainability perspective.
Can and glass business in Australia, a glass business in Europe, and a cardboard business in the United States. What does it look like in 10 years?
I think firstly it's geographical expansion. So as you said, they're quite separate businesses. So it's the spreading of their tentacles, I suppose, across each of their customers in each of the regions, and using of their capabilities in Europe, for example, in the US and Australia. So it's going to be more adjacencies, more customers, greater geographical reach, and greater margins that come with a larger portion of the value chain. Ultimately, this is an organic growth story for now. They have just done this big acquisition and they need to execute on that, and the market will not be happy if they decide to go and buy something else, for example. But once this is digested in a few years, they are quite acquisitive, so it is highly likely, I would say, that they at least execute on some bolt-ons to their strategy, if not more slightly larger acquisitions. We're always happy to fund acquisitions if they are great opportunities and are returning levels that are well above their cost of capital. So it's organic growth. In the more medium term, it is the M&A piece. And then like all slightly mature companies, you have the growing dividends and the potential for the other capital management initiatives such as buybacks or special dividends down the track.
And then, as we mentioned earlier, it spun out of Amcor in 2014, almost a decade ago. Is it competing against its former owner in any markets, or do you see that happening down the line?
They're very different in that Amcor is quite focused on the more plastic side of things, which inherently has probably more challenges, but maybe more opportunities when it comes to a sustainability perspective. they're very much though the more recyclable cans and glass and the like.
Okay. Fascinating. Whole
Yeah.
world of packaging.
Packaging. What packaging company will you pitch next year?
That's all we have on the ASA.
Yeah, I was going to say,
Bring
is your dream IPO Visi?
Well, Anna, as always, it's been a pleasure. Thank you so much for taking the time to speak with us today, and we look forward to having you back next year for the summer series.